Hello and welcome to BQ Prime. You watching Earnings with BQ, and my guest today is from Patanjali Foods, Sanjeev Asthana, who is the CEO of the company. Mr. Asthana, thank you very much for joining us on BQ Prime. To begin with, sir, your top line has been impacted by the edible oil prices. If you can give us an idea or outlook on how the prices are now and where do they head from here on?
Two events have occurred. One is the edible oil global prices have softened. And since India depends largely on the imports, nearly 70% of what we consume is imported. And those softening prices meant that the domestic values have also softened. And to that extent, while volumes have been generally flat to marginally up, we have had, in terms of the revenue basis, the prices, sort of been lower. And that's why you see the lower numbers on the edible oil side.
Sir, do you see prices softening further from here on, or have they normalized?
So prices actually are slightly on an upswing as we speak. And in fact, during all our investor calls also, we've been sort of sharing this, that there seems to be certain bias towards bullishness because of a lot of international events as they are happening. So my sense is that I think worst in terms of the prices going down is behind us. We probably should see an uptick in the prices in the next 2 quarters.
Will you be able to pass on those prices to the consumer? Because when it came down, you had to pass it down. When it goes up, will you be able to pass it on with the equal amount?
Yeah, so it's not about equal amount. I mean, edible oil prices, work in a very tight frame. So we normally have, pretty sort of narrow range in which the international prices get reflected on the domestic values. So I don't think it's about our ability to pass on. It's really about the consumers being spoiled for choices. So yes, typically, if there is an uptick, partially certainly, it can be passed on to consumers. And when the price is lower, and it's a pretty real-time basis, this happens. So that's never an issue in terms of higher prices reflecting on the higher domestic prices also. That's pretty.
One good thing we saw in the quarter was the increase in share of food and FMCG in your overall revenues, and the mix also towards moving towards premium products. How are we looking at this going forward? And where do you see the mix ultimately moving to?
The eventual target, what's the stated intent, is that we like this to be 50-50 between edible oils and FMCG. This quarter, because the benefit was that obviously there was a big uptick in the sales of the FMCG business, especially in the foods. And and that's why the percentages have gone upwards of 31, we're nearly 32% is the share of the FMCG business. And target clearly is that two parts we are focused on. One is increase the share to 50%. And second is the increase within this 50%, increase the share of premium products, which we have launched quite a few in last 2 months. And there are a few of launches which are planned over the next couple of months, and you will be seeing those, happening frequently.
The share of food and FMCG and the premium has helped you in margins as well. Will that be the gradual focus to push the margin to double-digit levels going forward?
On a blended basis, yes, for sure. I mean, that again is a stated intent. So on the FMCG side, the idea is that we clearly want to retain EBITDA levels of between 16 and 18%. On the edible oil side, we want our margins to be pretty much between 2 and 4%. And on a blended basis, the idea being that if the share of FMCG continues to go up, we should be into the double digits of EBITDA, hopefully over the next 4 to 5 years. And I think, at the base of growth that we're seeing, I think we should be closer to 50,000 crores plus at the current level if everything remains same. And with the margin sort of close to double digits, about 10%.
Sir, just wanted to get an idea of the impact that your employee stock option plan may have going forward in the future earnings, because you have rolled it out in 2023, and as and when the exercise happens, there would be a hit on your P&L because you have to take the expense. What could be the hit like?
It won't be excessive. So one is that it's a gradual rollout. The total stock options that we are sort of going to have is 3%. That's the total pool, and out of which we are not expecting a very significant part, being vested immediately.
Mm-hmm.
That the vesting period is going to be 3 and 4 years. The details
Okay.
are still in the works. We'll be able to share those, but it will not have much of an impact on our P&L.
Okay. Um, Another update that I wanted to get was the expansion in the palm plantations. When do we see results coming out of it? Because it's a gestation. I understand it's a gestation period before it, but where are we on it? And when do you see the benefits coming in for you?
So last quarter, we've added 4,500 hectares of fresh plantation. Right now, as we speak, we are slightly less than 70,000 hectares, and the progress momentum continues. So every quarter, we are proposing now to add between 3 to 5,000 hectares. Fresh plantation will happen. The organic growth that we had on the 65,000 hectares that we had planted over last years, that continues to grow and adds to the P&L. And this current round that you're seeing of the fast expansion on the oil palm plantation, this impact will be felt in between 4 and 5 years time.
Hmm. Okay, sir, if I'm not wrong, there is some changes to the use of proceeds which you have raised. Now it's going to be used for expenditure as per the board's decision. What is this change in the end use that you are looking at?
So this was raised, the last round of raise that we did was an OFS,
Yeah.
which basically was done at the parent company level. So they have obviously, they have own priorities, and they're working accordingly. And so both in terms of partially restructuring the balance sheet and as well as using for the ongoing expansion,
Hmm.
what the parent company has going to be using for that.
Okay.
And PFL in terms, other than them being majority shareholders and having got we don't have any control over that.
Hmm.
So that's pretty much that for PAL to be able to discuss in greater detail.
Hmm. Sir, my final question to you is that are you looking at taking up any more products from the parent and bringing it to your portfolio?
The as for the foods category is concerned, we've entirely sort of taken all of it, barring one or two commoditized businesses like dairy and rice, so that we have not touched. And in terms of the other businesses, while always there's a thought process that we could consider, we could look at them, but right now there is no immediate plan on cards to pull in anything further from the parent.
Hmm. Is is there a way you can tell us what kind of price hikes that can happen in edible oil prices? Because you said it's looking bullish now. What kind of hike that can be expected in the third quarter or fourth quarter going forward? Since you do a lot of
Uh,
hedging as
so
well.
So it's very difficult to project precisely as to what might be. There are certain, we are seeing a buildup of certain macro factors which might be supportive to the prices. So one is clearly the impact of El Nino, in South America, which we will see playing out this year. The second big macro factor is this ongoing sort of impact the petroleum prices may have with the crisis in the Middle East. And third, we are seeing that a lot of weather-related sort of issues in Asia, which have not yet been accounted for. So my sense is that we will see some challenges more on the supply side, and I think that might be supportive towards the prices being pulled up. Now, the extent of it and what the absolute numbers might look like is perhaps difficult to gauge at this point of time. One more thing I wanted to add that these biodiesel mandates that you have, especially ethanol in the US and biodiesel, and second, what we're seeing in Indonesia as well, that the biodiesel mandates as they're kicking in, I think that is also going to have a pretty significant impact in how the supplies are sort of going to get impacted. So I see, but there's a lot of sort of factors which are playing out, which might be supportive to the prices trending upwards in the domestic market also.
Just to get a perspective, sir, from the peak of edible oil prices, how much it may have come down?
So it came down to nearly 50% in the last year, exactly the same time. And right now, after that, it has marginally moved up. So we're pretty much from the peak of the edible oil prices. We are at about nearly about 55-60% of that. So there is obviously good room for upwards growth because the world has witnessed those prices. There is also in the same token room for prices to head down as well. But right now, if you were to ask me to sort of take a bet on it and the macro factors that we see, I would imagine that the prices will trend higher, certainly not on the lower side.
Mr. Asthana, it was a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
Thank you very much.
And wishing you a happy Diwali as well.
Thank you so much. To you too.
Wishing all the viewers of BQ Prime a very happy Diwali and a wonderful festive season. Have a great year. Thank you.